Good morning, everybody. Let's have a look at these charts. We'll start off with the total 2 because things could actually be ricocheting from this exact level, being the 21 exponential, the 20 moving average as well on the weekly. So, as I was saying on the Patreon, when it comes to, I was doing some tutorials on there, we're looking at Bollinger Band strategy, and if you're going to get a bounce from anywhere, this is going to be it. 65% more likely to remain in the portion of the band that you're in, so we're touching the bottom of the band at the moment. A breakdown below here is not impossible, it's 35%, it could happen, but for the moment, we're above it, so we'd be looking for a bounce. And to stay in this portion of the band. It doesn't have to happen, but that's what it says. That's just the statistics of the situation. So that's what it is right now. This is the total 2, by the way, so the crypto market cap excluding Bitcoin. So all of everything, everywhere, everything all together. We're also getting rejection on this trend line, which has been the situation since March, since the initial alt season that kicked in last year, completed in the spring. We've had the consolidation all throughout the summer, exactly as expected. And now we really should be getting to the period now where we actually break out and make increments on the way up. So that's your altcoin overall analysis. I know someone was on the comments yesterday asking for an overall altcoin video. I mean, it is kind of that simple. There is also a reason to believe that there could even be alt season from a rotation from Bitcoin to altcoins. I'm not going to call for it, but there is a situation which we've been in for probably best part of a week now, which is the Bitcoin dominance hitting 58.5% dominant with bearish divergence and an overheated money flow index read on a weekly. So all of these things historically have led to a peak on the dominance chart. Whether it does it this time is a different story, but all we've got to go by is the charts in front of our face, and we look for patterns within those charts, and there is similarities to the last time the money flow index was overheated on the weekly here. So here's a big example here marking the absolute top. Here's another big example marking this absolute top, and in this one it wasn't quite the top, it was close to it. You got one extra move up, giving us bearish divergence on the MFI, and then marked a significant top. So I'm not saying that this is it, but like I say, all we've got is the chart in front of us, and if there's patterns that seem to fit, then we have to make an assumption that maybe this could happen again. So it might happen again because it's happened 3 times in the past. Right then, so let's move over to Bitcoin where we'll finish. So Bitcoin's still holding on to that 10 exponential. So a couple of days ago I was expecting to move down into the 10. That's what we got. We got a bit of a bounce, got rejected, back down to the 10 again yesterday and again to the 10 today. Now, do we break lower? Because if we are going to break lower, we're probably looking for 65,500. That's probably the area of interest. It's the top of this box. It's the 21 exponential. It's ever so slightly above the 20 moving average on the daily. As far as the general trend is concerned, it's a happy trend. I like it. It looks good. I'm bullish across the board for everything. Whether that's immediately is a different story. But as far as the 4-hourly and the daily is concerned, they're moving into bullish situations. And we're toying with the idea of maintaining closures above that consolidation trend line of the entire consolidation from the spring. So we're getting close to a breakout, but we've not really seen a convincing one yet. There's enough evidence to say that it's going to happen rather than fail. Now, if we are going to move down ever so slightly, like I say, we've got those areas on the daily, but on the 4-hourly, we could go even lower, 64,300 or 400. There's a double golden cross on simples and exponentials, giving a really strong support around that 64,300. So there's plenty of areas to pick it up from. There is no difference to this video as there was over the last couple of videos where I've basically been saying, look, dips are for buying. That's all they are. We're moving into the last period of bull market now, a good 12 months of what should be sustained general gains, provided the economic situation continues to be relatively stable. Everything else should continue to go up. We're moving into periods now of reduced interest rates and borrowing across the board globally. So that should start to filter into all of the systems everywhere. So you might not feel like it now, but there's a lot of reasons to assume higher just on a fundamental level. But on a technical basis, we've got everything that we need to assume that the low is in now. The low being this 50 exponential with the bullish divergence on the money flow index on the weekly. These are the areas that we look for to spot specific bottoms, and it's been pretty much on the money every time. So look, just gotta wait. Like I say, this is the time now where portfolios should just be either added to and left to grow over an 8 to 12 month period should be the easiest part of the trade. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.